Stop letting your 3% mortgage hold you and your family hostage. Right now, millions of homeowners are refusing to move because they are terrified of giving up and staying stuck paying two mortgages. You know, they look at their tiny, crowded kitchen and think, oh man, we are stuck here forever. But a hidden financial strategy allows smart sellers to buy their next home and move in completely and then sell their older home later and not lose their minds. Today, we're going to be peeling back the curtain and we're going to show you what a bridgeless move might look like. I'm going to show you exactly how it works, the breakdown a real world case study of a family that we just showed this to. And I'm going to show you the three platforms that are operating in 2026 that could offer an opportunity for you and your family. So let's talk about this 3% trap, aka the golden handcuffs, right? Let's face it, the cold hard factor is this. Over 80% of active homeowners are in America currently are locked in with a mortgage rate under 5%. This has created what the economists are actually calling this the golden handcuffs. It sounds nice, it sounds all pretty golden. No. It's literally like a prison. This massive gap rate has caused, literally a suffocating reality for growing families. They're tight in their starter home, right? And when they started, they weren't. They were like with their partner. They bought it 4 or 5 years ago, and now guess what? Life happened. 2 kids, a dog, a remote job, and probably a few other things. You are physically suffocated in the home. You outgrew it years ago. Let's face the reality on this one. You're feeling financially paralyzed because trading a 3% interest rate into a modern market interest rate is like economic suicide. So what do? Do you stay or do you jump? Well, let's unpack that for half a second. Traditional old school real estate agents like myself, by the way, would tell you just list the home and just see where it lands. We'll be fine. Yeah, no, that's really not it is an option, but it's not the option at this point for a lot of folks. Just jumping is blindly, increasingly, that is dangerous, man, for you and the family. And I'm not saying physically, I'm just saying mentally, emotionally, spiritually, it's going to drive you guys nuts. But selling your current home first leaves you and your family completely stranded if you can find a new home in time. So let's run the scenario that you sell your home in 14 days, but it takes you 60 days to find a home that you actually like. So where are you going to go? I mean, you could rent back, in current situation, but that would weaken your position a little bit as a seller. I mean, you could do a lot of things, but most likely you're going to have to do the double move nightmare. Yeah, that means pulling your kids out of school, moving into a temporary overpriced Airbnb or some POS short-term rental, putting $5,000, black hole for storage units, packing, unpacking, unpacking movers, moving these movers, and more unpacking. Where I'm going with this? Doesn't sound so good at all to me. So let's look at the traditional offers and why they have failed in the past. And I've been on both sides of this, by the way, in my 26 years in the business. So let's take a look at the old model. So how do most families try to solve this problem, right? Well, they submit to the traditional contingent offer saying, hey, look, we want to buy your house, but we've got to sell our house first. That weakens your offer. When you tell a seller, man, I love your home, I want to buy it, but I have to sell mine first. In today's market, the way it is, there's different kind of thought patterns on how the market's actually going, but there is a bidding war, for the right properties at the right places, right? So right now in our market, we're seeing that about 70% of the time offers are rejected based upon the contingency factor that's built in. Builders and top sellers will not even look at contracts. Well, actually, they legally have to look at them. So take that back. They legally have to look at all offers presented. But they'll reject it because it's just too risky, right? And if you use an old school bank bridge loan to bypass this, well, you're going to walk right into a trap of super high interest rates. Oh my God, upfront points and fees. That means you pay a lot of money upfront, and I mean a lot. And then you step right into the toxic lending guidelines that instantly ruin your DTI or debt to income ratio, making you literally look unwritable. Go ahead and say that 5 times, by the way. Which means it would be hard to get a loan on your new home because you're carrying 2 loans in the bank's eyes. That's what it's truly saying. So let's look at a case study that we mentioned earlier in this video. This is what we refer to as the 1,000 square foot nightmare. So, to show you that this is not just a theory, let me introduce you Sarah and Mike. They were living in a tiny 1,100 square foot starter home. It had a beautiful, 3.1% interest rate, but they also they had a 3-year-old and a brand new baby. Sarah was working from home, and the house was literally bursting at the seams. We're talking like toys in the kitchen, baby crib was practically in the closet. Sarah was taking Zoom calls in the bathroom. We're talking, stage 5, holy macaroni socks. We got a dumpster fire in our hands. They were miserable, to say the least. Okay, and they also felt trapped in this cheap mortgage. Now, it's not a bad thing, but it is. Remember, golden handcuffs. They tried the traditional route. They found a beautiful 3,000 square foot home that was their dream home nearby that they could easily fit into now. They submitted a contingent offer and they promised to list their their starter home immediately. Well, the seller, within 3 hours, rejected their offer for a cleaner offer that did not have the contingency. Sarah and Mike were, let's just put it mildly, they were not pumped. Better would be devastated. They're just like, dude, I guess we're just stuck here for life. Okay, here we go. This is our new normal. Well, no. That's not what we did. That is when we implemented the buy before you sell strategy. So instead of guessing, we use the equity and we use the equity unlock model for them, which I'll explain the 3 models here in a second that we're using in 2026 right now. So this is the equity unlock model. Like I said, a specialized program where an appraiser will go out, take a look at their starter home, legally guarantee its value. So in Sarah and Mike's, option, right, in their storyline, they got $85,000 in equity in cash, completely interest-free, before they even sold or listed their current property. So now watch what happens. So armed with that $85,000 in cash, Mike and Sarah went right back out into the market, but this time they didn't have to look weak with a contingent offer, right? No, they submitted a non-contingent offer on a new house because their offer didn't depend on their own old home selling. The seller accepted it immediately, and they actually negotiated $12,000 off the asking price because of the offer was so clean. See, check this out. And there's even more to the story. So they moved their kids and their dog and their goldfish, into their big, beautiful, another 3,000 square foot home in just one weekend. And there's no temporary rentals. There's no storage units, no moving twice, none of that stuff, right? So once their older home was completely empty. We staged it beautifully, and there was no kids running around, thank goodness gracious, and there was no messy open weekend showings. So the house sold in actually 9 days, and we actually got 15,000 over our asking price. They used those proceeds to wipe out the temporary advance, and now guess what? They are living in their new home, super pumped on this whole process. So, what I want to talk about, Sarah and Mike's story is the perfect example of the modern escape route. Not have to be tied to a bank or crazy lending laws or anything like that. Buy before you sell programs have completely flipped the real estate industry on its head, and it's unlocked the home equity that you've worked for, by the way, first, so you can use it. So this gives you a massive cash buyer advantage. It turns you into a predator. Sorry, I had to do that. In the housing market instead of a casualty. You get to do a completely stress-free move when you transition your family into your next home. And I gotta tell you, then you get to allow the market to fight over your empty first starter home that's in pristine order, staged perfectly, great photographs, and it demands top dollar. This is a winning model all the way around. So let's get into models. Since we're going to be talking about models, here are the 3 different models that are operating right now to help you bridge this gap. Model 1 is going to be the cash-backed buyback. Think of think of this of institutional platforms like let's see, have you ever heard of Homeward and then Fly Homes? Those are two of the ones that we have seen and heard about and used for quite a while. These companies actually physically come in, so they step in and they actually buy your dream home. So you are actually going in and they're buying it. Like they're not even messing with your old home right now. They're buying your dream home, 100% hard, hard cold cash. You move into this home, and all you have to do is simply rent it back from them, while at a fair market rent, by the way, just for a few weeks while your old home is listed and sold. Once your old home closes, then you use that cash to buy your home back from the company and use it and go get a actual standard mortgage. It's very simple, very upfront, very, very like there's nothing really done to understand there. But I want you to go check out these companies, by the way. So go take a look at Homeward, go take a Fly Homes, and then I'm going to take a look at two more different products here, which I honestly like. The last one, I've used it multiple times. So here's our second model, the modern equity bridge. So companies like Knock handle this differently. Instead of buying your house for you, they give you like a short-term institutional bridge loan. I know we said bridge loans were bad. I get it, but this is just their model. Okay. So don't shoot the messenger over here. They advance you the down payment directly out of your current equity and write a guaranteed backup contract on your old home. This allows underwriters, this is the cool part, this allows underwriters to legally wipe out your mortgage off of your DTI, that debt to income ratio. Okay. The very important thing to have that thing as clean and tight as possible. So you can actually qualify for your next new home instantly. They will actually even advance up to 6 months of mortgage payments on your old home so that you don't have to pay two mortgages at once. Game changer. Now here's our third model. This is the one that we use for Mike and Sarah. This is the Equity Unlock agent integrated model. So real estate agents are pumped about this, and so are the buyers and sellers. So check it out. This is how it works. So a company called Homelight, which we've done many deals with, very easy to work with, and I'll tell you how they make their money in a second. They calculate the equity of your home, and they unlock about 70 to 80% of it upfront in cash. You go home hunting immediately, and then your original real estate agent, so let's just, for giggles, me, right? I list their old home or existing home as it sits completely empty. And you know what? If the market suddenly shifts, you will already have pre-negotiated a purchase price that Homelight will buy your home for. Now, they're not going to buy it for top dollar, guys. Okay. This is a for-profit company. They all are for profit. So, there is a yin and a yang to everything. And they make money off of us agents by getting a referral fee, all legal, all upfront, all acceptable on all sides. So they're doing just fine. But I love how they have that backup program for you there as well. So we've kind of gone over and outlined how you can sidestep a lot of these problems in the current, 2026 and, further markets. You don't have to stay cramped in your house, okay? And I know you've outgrown it. And just because the mortgage rate is locked in that you did years ago, the golden handcuffs can come off at any given time you choose to. If you want to see what your current home actually qualifies, and if one of these three models might work for you, you know what? Go ahead and drop a comment down below, right down there. Just type the word move, and then I personally will reach back out to you and we'll talk about the different models, what your position is, what your timing is. And then I'll introduce you to some of my inner circle folks that have these programs, and we'll get you guys squared away and get you moving. All right. So with that in mind, actually, put in the comments as well, what is your interest rate right now that you're currently sitting on? And how much square footage would it take for the new home to have for you to abandon the current rate that you have right now, right? Also, don't forget, like, subscribe, comment, and share this. I love you guys. Until the next video, deuces. I love you. Bye.